Government of Canada announces boldest mortgage reforms in decades to unlock homeownership for more Canadians. Yes, that is the title of this press release from the Government of Canada. Dion and I will unpack whether this is true or not. Stay tuned for more. Here we are, my friends, back from summer holiday, summer vacation. Mr. Dion Beg, how you doing, my man?
Hey, man, I got a tan. I don't know if you noticed.
Yes.
It's permanent.
It's permanent. Nice. Nice. How's your summer been?
Yeah, good, man. I think I went from everywhere from Wonderland to the CNE, and I'm just happy I didn't get sick because I know that those places are places you go and come home feeling not so well days after. But yeah, we survived. We managed. You know, I remember thinking during the days of the pandemic, would things like amusement parks, like the CNE come back? But they came back stronger than ever. Like so many people. But really, really good weather, great summer. Happy to be part of all of that. Yeah.
Excellent. And of course, nothing happened in real estate over the summer, right?
Well, a lot happened on my side of the fence, man, in terms of rates, as you probably know. And yeah, I mean, we've had more inquiry in the last sort of 2 months than in the previous probably several months, just because people are like, okay, what does this mean for my affordability now with now 3 consecutive, rate drops and more predicted. So it's nice. This is the thing that Canadians have been waiting for. This is a first rate drop in 4 years, right?
Yeah.
And more than 2 years since we had it start to increase. So a bit of a relief, but there's also some indication, it's a little bit too late, meaning that the damage is already done for some. But yeah, all sorts of calls I'm taking from people excited about this and also people dealing with the remnants of the rate increases that we've had to deal with over these last couple of years.
Yeah. And I feel like, well, pretty much every news cycle, but this in particular, the Canadian real estate market, whether it's, people believe it's in a bubble or not, or a few cities perhaps are in a bubble. I feel like people are more in tune with these rate drops than they ever have been. I don't know about you, or at least aware of them, right? I think back 10 years ago, a rate drop or an increase wasn't really top of mind, where today it is, right?
Well, yeah, I think, years ago when they moved, they hadn't previously moved 475 basis points in the previous 24 months. And so when that happened, people know the impact that it hurt them on the way up. And so they're looking for that relief. And you are right. It's like every backyard barbecue over this summer for sure was talking about rate drops and interest rates and mortgage payments, as it's impacted everybody.
Yeah. And whether we like it or not, more than often, the bank is our biggest partner when we go purchase a property. And, you need to be educated, obviously, when you're buying a property or even selling a property to understand how that affects the saleability of your property and the valuation of your property, of course. Okay, we've got lots to go through, obviously, and you've got some slides that you want to share with us. And I want to remind everybody as well that the information that we share is to educate not only our colleagues, but of course, clients. And should you have any questions or you need clarity on something, please reach out to Dion or myself. We're happy to, help you find that right answer, the answer that suits you the best. And I think that's important to note as well, Dion, is everyone has their own unique situation, right?
You bet. And I mean, we're taking calls from people in all sorts of situations, from people struggling to people trying to build that better future in the current market. So whatever situation you're in, guys, trust me, I've probably seen your situation, one very similar to it. I'm sure Gary, on the real estate side of things, you could agree you've probably seen it as well.
Yeah. Okay, so what are we going to do? Well, we're going to cover some of the highlights that's been going on in the summer. And of course, we just had some, we'll call it late breaking news from the Canadian government or the Bank of Canada today that we're going to share with you. But more often when we, excuse me, when we do these videos is, yes, sometimes it's the, neither Dion or I are the sky is falling type of people, but we do like to provide and show you some opportunities. And I think that's where this video is going to lead, perhaps in some opportunities. So Dion, let's go ahead and share your screen there and walk us
Yeah.
through what you've got for us today.
Okay. So just the other day, I did a presentation to a couple of hundred people, just talking about this great rate drop that we've been waiting for. And I'll just sort of point out here that, we rode this crazy number, this crazy ride up here, right, with these interest rates. And now we are sitting around about here. And this red line was where major banks predicted rates to be over the next 12 months. The purple line is their revised view of this based on really poor economic data that's come out, in particular, unemployment up around 6.6% nationally. I just saw the GTA number, Gary. It's over 7% in the GTA. And then separate to that, GDP per capita. If you measure GDP not by just the national GDP, but per capita, I think we're now into our 8th or 9th month of negative growth. And so by that measure, we are deep in recession. Okay. Now, as we go on here, I want to point out that they survey the banks every now and then about their opinion of where rates are heading in the near future. And so, all major six banks here, and they've put forward. I just want to remind everybody today, as we talk to you, which is September 16th, the Bank of Canada policy rate is 4.25, and so this is where the major banks think we're going to land in Q4 2025. So BMO, National, Royal, they're all at 3%. You can see that CIBC and TD are the most optimistic for significant rate drops, where they believe that policy rate will be at 2.5. Now, I just want to clarify, today we're at 425. If we get all the way down to this 2.5 number, that's the Bank of Canada policy rate. That is not the rate at which you can borrow money for a mortgage. If it's there, and by the way, that's 1.75% lower than where we are today. If we get there, the retail rate for mortgages on a 5-year, you might be able to pick up a rate at around 3.5% this time next year, or Q4 next year. Now, of course, many things can happen between now and then, nationally as well as globally, that could impact that. But it's nice to see that banks are predicting a little bit more optimism as it relates to interest rates. And then the next question is, should we buy in this market? So I'm going to pull up some stats from Toronto Regional Real Estate Board here as it relates to year-over-year numbers, August this year versus August last year, okay? And these are some key metrics that if you're a buyer in particular, or a seller, you want to be watching this. Average price last year versus this year, small change, probably not as big as you would have expected, right? Given all the negative media, as well as where the rates have been. But we've dropped by less than 1%. Unit sales, they're down about 5%. Again, I was expecting it to be a little worse than that. New listings this year in August versus last year in August, we're not far off, okay? So far, nothing surprising. This is where things get interesting. Active listings, Gary. So active listings are up 46% this year versus last year. And what that means, guys, is that even though August was on par with August last year, the properties that were brought to market in the months before August, last year they probably sold or they cleared. This year, they're still sitting on the market. Is this what you're seeing, Gary? This is the feedback you're getting from your team?
Absolutely. And in fact, I might be able to share a couple of slides here, but this definitely, those properties that were listed in May, June, there's some of them are still lingering around, as you can see right here.
Right. Yep. And so what that means is, more's coming to market, but they aren't clearing the market. The more that are on the market, of course, the days on market is extended up to 28. Do you remember those days back in 2021, Gary, where houses sold in 3 days, 1 day, or 1 hour? Remember that? that was a crazy period of time. I think 30 days on market is pretty much normal. That's a normal market, no? if we go back to that. So maybe we're approaching that. And so with all of this in mind, the question would then be, well, what's happened? And here's what's happened. It seems that sellers have returned to the market, but buyers have not. And I'll tell you just my 2 cents on this. I feel that there were many sellers who are holding onto their property in the anticipation that when rates dropped, and they listed then, that there'd be a flood of buyers to buy their property. Uh, and what's clear is that the buyers have seen the quarter point, and now 75 basis point drop, and they're still sitting on the sideline saying, yeah, I know that rates have dropped, but that price on that property is still a little bit outside of my number, or outside of the monthly payment that I can afford. I'd happily pay the price, but I can't afford that monthly payment. We'll talk about that a little later, Gary, as it relates to those changes to amortizations. But this is what we are seeing. Now, I'll tell you anecdotally, we're getting a lot more inquiry on the mortgage side, where buyers who had disappeared for a while are inquiring about rates and requalifying. But I feel like the market will continue to be this way for a little while. And if you're a buyer, what I will say to you is this: if you're looking for a needle in a haystack, all this market data means is the stack just got bigger, and there are more needles, meaning that there are more people who really, really need to sell who are going to be in amongst that list of sellers. So the last thing I want to say is this: you might be saying, well, let's just wait another 6 months and see what happens. I would say there's nothing wrong with waiting, but do not take your eye off the market. And here's why. The CMHC gave their price outlook in this huge housing market outlook report a couple of months back. And they said that this year, pent-up demand will re-enter the market. They said that next year, 2025, home prices will reach the same records that we hit in 2022. And then this is probably the most scary one. The year 2026, they expect record-breaking prices to return to Canada. So I'm saying to you, if you're a prospective buyer, please watch the market really closely, week to week, day to day. Work closely with your realtor right now. Make sure you are on that list. And if you are watching those lists like a hawk, I feel like you will be the one who spots that deal when the others don't, because you've been in the market watching values with your realtor.
Absolutely. And I've got a few slides to help remind people of what those 2025 numbers were, 2022 numbers were, meaning what 2025 could look like.
Yes, please.
This is really, really important. Will this happen? Well, obviously time will tell. However, CMHC, say what you will about them, they do a tremendous amount of research into what's going on in the market, and it guides, the banks and the lenders of what they can and can't do and what they should expect. And of course, real estate boards right across Canada were very in tune with what they provide from their information. So if I just share my screen here, Dion, this what we're looking at here is, to reiterate in some sense of form, the active listings of what Dion was just talking about. This is for all the property types in the GTA, and you can see this is the highest that it's ever been. Not just in the last couple of months, the highest that it's ever been. We're sitting at approximately 22,600 listings for freehold properties right across.
Okay, so that I didn't know, Gary. So this is factoring in all of recorded history on the Toronto Real Estate Board.
Well, dating back to the last 10 years, dating back to 2014. Yeah.
Okay, 10 years. Gotcha.
And it usually, if you've been playing along with us the last couple of years, or been following me at least for the last 10 years, you know that about 90,000 sales in the Toronto Real Estate Board is a good moving market. Last couple of years, we've been low, very, very low. Last year, we were below 70,000. This year, I'm not sure if we're going to get over 70,000 sales. So you can see, a third of homes are currently on the market that need to be sold, which is interesting. The next slide quickly that I have here is the average sale price. And this is what I kind of wanted to land on. Currently in August of 2024, Dion, that's $1,000,000 74,000. That's our average price for all
Yep.
property
So
types.
just under 1.1 million, just
Yeah,
under. Yeah.
for freehold.
Okay.
And you can see this high peak right here. That's 2022. That's what the CMHC was just talking about, with an average price of 1.334.
1.33. Right.
So
Right.
if
So we're
you're
looking at
okay
20.
going back to that and buying at that price, by all means, wait.
Yep, I hear what you're saying, and this is where you got to keep your finger on the pulse. Like, wait until you think is the time to buy. And the only I used to be a financial planner, and back then when we were learning about picking stock, picking mutual funds, and people love to watch the stock market, they're like, the only way to know when you've hit the bottom is when prices start to increase again. And so the minute that you see prices start to increase in your area, you know you've missed the bottom and you better move fast, right? So be prepared to move fast.
Yeah. And we're seeing lots of my colleagues, in fact, sharing their success stories of what they perceive as success, as sold over asking, sold 10% over asking, or sold $200,000 over asking price. You can see the average price, though, is still quite low compared to where we were in 2022. Make sure you understand what I just said there. So it's still selling for that average price. It's still selling for fair market value. It's just a matter of the marketing that gets put behind that individual listing where it does sell for over asking. So don't allow the market manipulation, in a sense, or advertisement to steer you the wrong way. Make sure you understand what your local pricing is. Again, this is for all of the GTA. For detached homes, no one buys all over the GTA for detached homes. You have a very specific market. Dion, we should just touch on condos, because I know that's a big conversation right now. Active listings for condos. You can see, again, we're at the highest that we ever have been over the last 10 years. In July, it was almost 9,000 units for sale. And this is the condo apartment style, like all the high rises downtown. Right now, we're at 8,300. And if you look back at October, that was October 2020, that was 7,600. That was the last time it was that high. So
Okay.
4 years ago, during a
Yep.
pandemic. And then
Yes.
maybe more importantly, what we should look at is the average pricing. And right now we're at 674. And this is, again, history tells us this is as high as it's been for a long time. However, here's the interesting thing for condo buyers. Perhaps this is an opportunity for you. In May, it was $731,000. So that's a decrease right now of 7.7%.
7%. Right. Yep.
So
Yeah.
opportunity.
And
Opportunity. And we know there's a lot of listings for sale right now in condos, if that's where you are. If you're a condo seller, know the data, understand what's going on. And we can see the months of inventory. In fact, we're seeing, I have a screen here from Scott Ingram, a colleague of ours in as a realtor, and shout out to him for putting this chart together. 416 months of inventory. We can see the condos are sitting at 6.7 months. So
yeah.
lots
Wow.
of lots of needles, as you like to say. Freehold
Yep.
is on average at four months, which is, if you pull it just August, we're seeing that 30 days that you saw. If we're looking at a big picture, we're seeing 4 months worth of inventory. Again, this
Well,
is all the 416.
I'll tell you, as it relates to those condos, Gary, we've had our clients, mostly first time buyers, buying these condos. And what we know is that the seller was facing a choice, a tough financial choice. And the choice was, do I continue to rent my property at negative $1,000 to $2,000 a month every month, as they have been for quite a while as rates went up? So that's option one. Or option two was, do I just sell this thing for 50 or 100 grand less than I would have hoped and be done with the pain, right? A good friend of mine talks about, you can either butter knife it or butcher knife it, but either way, you got to take care of this problem, right? And so the question was, those who want to use the butcher knife are like just pricing it low and getting rid of that thing. And therefore, for the buyer who's ready to jump on that opportunity, there's 8,000 potential options there, right?
Yeah, yeah, lots of opportunity, and of course, we're seeing, rates come down. My question to you, Dion, as rates have been coming down over the summer months, are lenders offering different style of products or looking at underwriting
Yeah.
things slightly different? Talk to us a little bit about that. I know this is a little off script, but talk to us a little about that.
Sure. Yeah, so we have noticed interest rates from some of our major banks who had chosen to literally become uncompetitive. In particular, I'll say Scotiabank, and I think we spoke about this on an earlier podcast where they had to set aside more funds for it impacted the liquidity. They had to get more deposits. They really focused on deposits rather than lending over the last year or so. And now, like literally in the last week, they've decided to turn the burners on and say, okay, we're back. We're back in the market. And so we're seeing rates super competitive from them, whereas they weren't really as competitive as they could have been over the last year. I think I also mentioned that BMO entered the mortgage brokerage channel with a select few brokers this year, and we were fortunate to be among those. So we can tell you that we've noticed that some of their rental calculators at BMO are superior in the industry. So we're helping people with 6, 7 properties qualify with a major bank, whereas it was very difficult for them to do that a little while ago. Also, depending on the bank, you might come across cash back as a possibility. So there's some incentives based on the amount of money you borrow and incentives for switching. So if you're going from bank one to bank two, there may be some cash incentives there. So there's actually quite a bit in the market right now, which as a broker, it's fun, but it's also stressful because we've got to keep up with every new offering and they literally change multiple times a day. So when a person calls me and says, what's your rate and what's the offering, I have to say to them, just wait a second. It might have changed in the last hour. That's how active the pricing and offering is right now. So definitely for those of you looking for a rate right now, don't just stop at your bank. Like, sure, stop at your bank, but then call a broker and figure out, are you getting the best you can? In most cases, you'll find out there's better out there.
Excellent. Excellent. Okay. We said there was some late breaking news just before we launched today. Talk to us about what's going on from the CMHC and everything that we're allowed to do with amortization and everything like that.
Okay, so I would say that this is huge news. Okay, this is huge news that our industry has been waiting for a very long time as it relates to insured mortgages. Guys, so insured mortgages are mortgages in general where you're putting down less than 20% to purchase a property. We'll just make it as simple as that. And so in the GTA, well, in Canada, there has been a cap as to what you could get insured for in terms of purchase price. And that purchase price had to be below $1 million. Meaning, if you were buying a property for $1,001, or actually $1 million even or higher, then you had to put 20% down. That's 200 grand on that purchase. Okay. Now, just today, they've announced that they're increasing the upper limit on that threshold from $1 million all the way up to $1.5 million. Now, Gary, I know you and I have spoken about this previously, and we've been asking the government for it. They must have listened to us. That's what happened, right? This is why it happened, right? But yeah, look, in Vancouver, in Toronto in particular, first-time home buyers are facing this idea that they might have to pay $1 million for that property, and so, or more than $1 million for that property. And so, to be able to now get that mortgage insured, which means I do not have to put down $1 million, $200,000. It's a hell of a big positive. And I've got the numbers here, Gary, on that $1 million purchase where they previously would have had to put down 200. Now, under the new guidelines, we're looking at $95,000. So that's less than 50% down, right? Previous. And by the way, these changes come in on December 15. So if you're a first-time home buyer, I'd recommend you get reorganized now. And if it makes sense to wait till December, you do that. But at least get your ducks in a row now. But look, having to put down 105 grand less may make it very well within reach of some people. I know a lot of these people are getting help from parents, and now that help from parents may not have to be a 200 grand gift. It might now be a $95,000 gift, which again makes it within reach of people. So an increase on that threshold is one big change. But there's one more big change, Gary, and that is amortization. So again, guys, insured mortgages for many years now have only been able to get a 25-year amortization, meaning you must schedule to pay that money back over 25 years. And again, us in the industry, as rates have increased and prices have increased, we've said, look, if you want first-time home buyers to get in the market, you have to make that monthly payment smaller. And the way you do that is you allow them to stretch out that amortization so that monthly payment can drop in price. And so early this year, we saw the government say, okay, look, if you're a first-time home buyer and you want a 30-year amortization, you can get it if you buy a new construction property. So that was big news earlier this year. The good news is, as of today, that 30-year amortization is extended to all properties, not just new construction properties. Okay. And so I'll give you some numbers here, Gary, and I wrote them down. So forgive me if I'm reading off a piece of paper here. But let's take a look at a $900,000 mortgage. Okay. Previously, under a 25-year AM, you'd be looking at a payment of $4,981. And now with a 30-year AM, that would be $4,538. So that's a $433 differential, which is about a 9% saving on your monthly payment. So, 9% on anything is decent. But number one, this means that your payment could drop by around 9%. Okay. On the flip side, your ability to borrow also could potentially increase it by 9%. So let's say that you're okay with that payment. Okay. If previously you were aiming for a particular number, and here's the example I got here, $100,000 income. Previously, you would have qualified for approximately 450 borrowing on 100 grand. Under this 30-year AM, you would qualify for closer to 490,000. So that's an extra $40,000, which represents about a 9% uptick in your ability to borrow. So either way, it looks like about an 8 to 9% benefit to the first-time home buyer.
Yeah, this is excellent, and everyone's going to look at this as helping. Even if it's new construction, helping those builders out and everything like that, what we're doing is just helping that economy to start rolling again as it should. My question for you, Dion, as from a strategic standpoint, as if we know today that perhaps prices as low as they've been in a while, and if you're seeking this type of mortgage, for instance, if you need to get a CMHC mortgage for a property up to 1.5 million in the GTA or Vancouver, wherever you happen to be, can you qualify today for this type of mortgage closing after December 15th? Or do you have to wait to December 15th before this comes into effect before you get qualified?
So that's a great question. But my understanding of this is if your deal was to close after that date, then these new rules should apply. And so we've been in scenarios like this in our industry in the past where changes have come in, and yes, we can prepare somebody now with the anticipation of this rule change coming in, and as long as that closing date happens after that integral December 15th date, then we should be fine.
Yeah. Yeah. So with everything that we've learned today, my friends, knowing that perhaps CMHC is anticipating prices moving on the upward trend and the prices right now being somewhat here, working with a great realtor, they can negotiate for a longer closing. We've seen closings up to 4 6 months, even 9 months should it be. And of course, if you're buying a brand new property, well, sometimes those closings can be years out. So it doesn't matter if you start negotiating on something today, you can negotiate for a longer closing. So make sure you're asking your realtor that type of question, because there are sellers out there that want to sell today, knowing that their home is sold, but have a much farther closing. That happens a lot more than we think that it does.
Yeah, I've actually got one on my desk now closing mid-December. So yeah, certainly that is happening. And it's funny, Gary, as you're saying this, one of the other, it's here we're talking about delaying a purchase. Earlier in the year, it was investors trying to sell before that integral capital gains tax date, right? So there was a race to get things done beforehand. And now it's like, okay, well, maybe we can slow things down, slow the process down. But I'll also say, I think this little couple of months might present an interesting window of time where if a bunch of first-time homebuyers are waiting until December, then if you don't necessarily need to wait, there may be a window where you can jump. Because my sense would be if affordability increases in December and another rate drop is expected in November, then I feel that there would be more buyers come December, January, which normally would be also a good thing. Um, Although seasonally, as we've always discussed, December, January is kind of like a lull time in our industry. But again, if you're one of those buyers who are willing to put on your boots and go out and find properties at that time, this could be the makings of a really interesting time for first-time home buyers.
Yeah, absolutely. And to provide a little bit of clarity to summarize that as well, August is always a lull. So the numbers that you're going to be seeing in many reports right now, just remember, August is always a lull in our 12-month real estate cycle. So my friends, lots going on. We are going to be back on a more repeatable, doing
Regular?
our videos again. We've had our summer vacations. Sometimes I still like I'm on summer vacation, but look forward from Dion and myself to provide much more insight into the fall months, because there's going to be a lot happening from the banks and how the banks and different lenders react to some of these things that's going on by CMHC and the Bank of Canada. Always, my friends, reach out to Dion. Dion, do it for us one more time.
Yeah.
How do people get a hold of you?
It's kangamortgage.ca or Instagram at the Dion Beg.
There you have it. The Dion Beg. No, this way. There you go. I'm Gary McGowan. We'll see everybody on the next episode. Goodbye for now.